it is interesting, right? Because the global markets is such a good point. Because I know you and I were talking about this quite a lot before. For the length longer than this podcast will be, is what we were talking about it for. So in the global markets, in 2022, which is where we're at now, we're in May, so it's been about 5 months. The global wealth has dropped by 14%, which I'm not just talking Australia, not just talking the US, like the global wealth, which equates to about $35 trillion. And that does include about $1 trillion worth of crypto as well. So as a comparison point, and we were talking about this from the All-in-One podcast, where in 2008, the global wealth dropped by 19%. It was like, this is the global financial crisis. This is like crazy. Holy smokes, what's going to happen? Like, where do we take this kind of insights? Like, is this because we rode such a high over the last 2 years that now everyone's like, yeah, we knew it was unrealistic. Now it's just coming down to what's probably realistic. It's not a crisis yet. Or is this something more where it's, no, this is the leading into something more important?
Can we do like our speculations, pure speculations?
Of course we can. Of course we can.
I'm going with it. I think the next few years is going to be like, I'm going to say turbulent, because I think a huge world event has happened and I think we're still working out how to move past that as a world. So whether that's more restrictions in countries, how we do trade, supply chains, like there's going to be like a whole bunch of turbulence. Also a whole bunch of immense opportunities that come out of this, because there's all these old ways we used to do things that are going to become new, and the people that are positioned for that are going to crush, absolutely crush. Once we're kind of through that though, I'm very optimistic. I look at it and go like, in general, like most people still want to have a good life. They still want to own a home. They still want to do business. Like I'm not going out into the streets and it's like doom and gloom everywhere at all. And I know there's a whole thing going on in like Russia and the Ukraine as well at the moment, which I'm not going to comment on because I don't understand it enough. But I do believe it's going to work out. I do believe there's going to be a good news story on the back of it. It's just this interim period of the next, I don't know how many years, while we all figure this out as a globe, a lot's going to change. So that is the opportunity and also the challenge.
Yeah, and because there's so many economies that printed so much money. We now see inflation kicking in at high numbers. And if you haven't listened to the inflation episode, go and listen to the inflation episode that we talked about it and calculating your own personal inflation. The interesting thing that I found fascinating was the difference between now and 14 years ago, 15 years ago, was that 14, 15 years ago, it was very sort of centralized into the property market, from what I understand, where now it's kind of being felt across a lot of markets, where it's almost like property markets are kind of weathering the storm at this stage.
Well, the property markets are the strongest at this stage. That's probably the one area that hasn't been obliterated across this year so far.
Is this a leading indicator that property might be impacted? But also, I want to get into some specifics around, okay, well, what does that mean for businesses and individuals, like business owners and entrepreneurs, like who are playing in that space?
Yeah, so just to highlight a point there, 2008 financial crisis was basically built off the idea that a whole bunch of people got mortgages who couldn't afford them on these subprime loans. So to give you an idea, people were able to get a mortgage, and then for the first few years, the payment on it was really little.
Tiny.
Yeah. And then as soon as the rate changed, so the what do you call it? Like the free trial offer was over, the introductory rate.
I was going to say, you're a SaaS founder now.
Yeah. They all defaulted. And as they did that, all that debt just took out the whole financial market that was way over leveraged, and some banks got caught out. I've grossly oversimplified that. There's a whole bunch, but like that was the cause. And like it did a lot of damage across the world, like a lot. In where we're at in the world right now, it's completely different. It's incomparable. So you don't have these mortgages defaulting everywhere because that same type of thing hasn't happened. Now, the way I'm kind of thinking about that is like a lot of measures have been put in place to prevent that now. But if you look back further to like 2000 was like the dot-com bubble, which is like, that was a different type of crisis or thing that was happening there. So now we've just got this like COVID thing where it's been supply chains, lockdowns, and we're working out how to deal with that differently. And again, like if you go to each of them, it's like on the back of the dot-com bubble, some of the biggest and best companies come out of it.
Yeah.
Amazon's, Google's. I'm neglecting to mention some other ones that I'm not so favorable on at the moment, but some really good companies. Out of 2008, like the housing market has done really well across the world, particularly if you're in Australia. Like if you bought property in Australia in 2008, you'd be pretty happy right now.
Very happy.
So the same types of things will occur here. We just don't know what that wave or next thing is going to be. I think if I was going to give anyone a message, though, it's like if you're just way too heavily exposed where market shocks can take you out, is like you probably need to reassess how you're thinking about like how much debt you have or how much reserves you keep or how much risk you take in the world in general. Yeah,
one of the things that I'm seeing is with the impact of inflation, with an increase in interest rates, the pressure for employees and the people that we employ is going to go up, right? For expenditure pressure is what I mean. And so what we're already seeing is these pricing being factored into the day-to-day expenses, right? Like things that we're buying, like it's whether to your point, supply chain. So if you're doing a home renovation, if you're doing these things around, like just think about your employees doing these renovations or even yourself personally, it's now 25%, 30% more expensive. There are significant delays. Property prices are now more expensive. All of these things that we live and breathe day to day are getting more expensive, and it will roll into everything else, right? What we consume, whether it's food, whether it's the car, whether it's petrol, all these things are going up. However, you look at the increase in salaries, and if you're a business owner, listen to this, just think about the increases that you've provided for salaries. Now the pressure for them increasing as well to sort of factor that in is there, right? Whilst you've also got this greater economic downturn around, okay, from a global wealth perspective, like if 14% of that has dropped or $35 trillion has dropped, where is that coming from? So money's not moving around as much as it used to. Things are becoming more expensive and employees aren't getting paid, or at least in some of my circumstances, like sure, people are getting increases and stuff like that, but it's not from market pressure. It's just because you've been with us for a long period of time, etc. And we're now having those conversations in our businesses to say, what does this actually mean in order for us to prepare for what's coming?
Don't you find that interesting though? So like legitimately, we've had conversations where we've changed what we're our plan and outlook for what we're doing in the next 5 years because of this. I think everyone's doing that. I think that's the conversation everywhere.
Yeah. And so for business owners, like the biggest caution I would say is just think about your employees, the pressure that they've got and what that means for your business, because now profitability is important. How much you charge your customers is important. Because if everyone else is charging more and you haven't increased prices, right?
Get that margin compression.
Yeah, margin compression, right? But if your employees are expecting more because their house is costing them more, their gas is costing, or their petrol is costing more, their car's costing more, all the things are now costing more, they're either going to get that from yourself or look to get that from somewhere. And so as a business owner, I think it's not that you need to do a knee-jerk reaction. It's more just being aware, right? So if retention of employees is sort of like not going as well as you once had hoped, or you're getting some pressure from employers going, hey, like we need some kind of increase, or you are now becoming the cheapest in the market when you're selling your products and you're looking at, well, why am I the last to this game? This is why, is because this inflation it needs to go rampant. Like it needs to go through everything. There is things that don't really get excluded from this. And as a business owner, I think it's just one of those things you just have to think about and just be aware of, that if you haven't done it yet, you should probably think about it as to when are you going to do it. Now, if you increase your prices by 1%, 5%, 10%, 20%, that's industry specific. That's obviously relevant to what you're delivering and offering. But it's just something that I really think that everybody needs to consider from a business perspective, but also from their own perspective on their employees, etc.
Huge. But this is why I love being a business owner, right? If you're an employee working at a company right now and you don't get any control over the things we're talking about, so raising prices, changing offers, setting up for like what's going to be valuable in the next 5 years, right? And you're just working in a company and the people at the top are rigid, probably boomers. Let's shit on the boomers. Right. And it's like you go and you're trying to go and ask for pay rises or trying to increase it because you're feeling those pressures. Good luck.
Correct.
I think that's a real huge thing. But if you're a business owner who takes responsibility for your life and realize you're in control, you can come up with new products and services that are going to be more profitable and beneficial in the next 5 years. Like there's things that are going to be created in this time that are going to be massive tailwinds. Like you get so many more dials and levers to pull, so you can ride these types of environments much better than employees. And I know that's a heavy opinion, and I don't mean to make light of people who have jobs. There's nothing wrong with having a job, but like this is one of the reasons why I just couldn't do it.
Yeah.
I want to make sure that I'm setting up for a strong next 5 years. I don't want to be relying on someone to do that for me.
And that is that optionality of us as business owners, what we have with that lever. But it's also the same with our wealth as well. Like as we're personally investing, we have the exact same levers, right? Like we can store more cash because we think that prices might increase more or decrease more, or we might speculate on whatever it may or may not be. But the final thing that I will just say to all the business owners that are listening to this, and this is what I'm doing throughout my businesses, is looking for the pieces of fat that have just increased my operational expenses by like 1 or 5%. Right? Like, what about that subscription that I could just cut out? Right? Well, what about those people that I haven't cut out of my Office 365 or Google Apps or Canva or all of these things? Like, what can I just start cutting out? Because that will allow me to unlock and actually see what that real baseline that I have as an organization is in order for me to factor all these changes in.
Could I ask you like 2 rapid fire questions here then? Just 2 little ones quickly.
All right.
All right. What do you think is more likely? We get interest rates to 2% or a recession, right? That's the first one. And then the second one is like out of 10, how optimistic are you for the next 5 years and future in general?
Good questions. Okay, so the first one is I'm leaning towards a recession. How big it is, how great it is, I don't know. So when I say the word recession, I don't doom and gloom it. It's more I don't think that interest rates can go significantly higher. And going back to COVID and all these things, we've printed so much money. We've got so much debt. The government needs to take so many different actions that are outside of just, hey, let's just increase interest rates. Like there is a cap to this before money stops moving around the economy. Like you can't keep increasing interest rates and go, hey, everybody, just can you please go and get some credit card debt? Can you please go and keep buying houses? Please, 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 please. Like it really sort of slows that down. So I actually think that a lot of like global wealth's dropped, as we spoke about. Interest rates are going up. Inflation's going up. But as an economy, we've got more debt that have been produced over the last 2 years. It is insane. I personally think that we are heading towards whatever that recession might look like, albeit it might not be like a real recession. Like Australia did not get as impacted in 2008 that United States did. So it might just be our version of something similar, or it could be worse. It's more, that's where I'm sitting at. And I'm actually, before I answer the second question, what do you reckon we're leaning towards?
I'm in the same camp. I think it is more likely that rates get cut than they go up above, let's say 2%.
Yeah. And so then over the next 5 years, like what am I sort of pushing towards? I'm just
wait. You got to do it like an out of 10, no vagueness. I need a dial or something here.
So I am still of the opinion of continuing to invest is always the greatest win. Continuing to operate businesses is always the win. I will provide in my mind, I put a macro view over the top of it. I'm like, well, will the businesses still be relevant? Are they still going to be solving the problems that need to be solved, et cetera, for me personally as a business owner to weather the storm? And I feel good about it. My properties and everything that I've invested in.
Still haven't given a number.
The number I'm going to lean on is over 5 years, I would go like a 8, 9 out of 10. And the 1 or 2 is to factor in something that I don't know that is being spoken about in rooms that I'm just not part of.
I'm an 8. I'm of the same view. I'm like, there is so much. I've never seen more opportunity. My biggest problem right now is I don't have time to execute on all the greatest things I see. Like there's so much good out there, particularly for Australian business owners. Like this is a time to thrive, not to die.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.